Okay, let's unpack this. Today, we're doing a deep dive into Hindustan Zinc Limited. We're looking at their first quarter results, sure, but also their bigger strategy.
Yeah, it's really about understanding how a major player like this keeps its edge, but also pivots,
Hmm.
especially with everything changing, energy transition, critical minerals.
Right. How do they navigate that? That's the core question we're digging into.
Exactly. And we've gone through their latest investor presentation, the financial results themselves, the press release,
Hmm.
the whole package, really.
So we can piece together a full picture for you.
How they're handling the financials, but also like mapping out the future. Big stuff happening there.
Okay, so for you listening in, we're going to boil this down, get to the essentials. What's the performance look like? What are their big plans? And the sustainability efforts everyone talks about.
Yeah, you should walk away with a pretty clear sense of where they stand and where they seem to be heading.
So let's start with their position. Globally and in India. I mean, they bill themselves as the world's largest integrated zinc producer. That's significant.
It is. And they're also among the lowest cost zinc producers globally. Plus, in the top 5 for silver mines.
These aren't just talking points, are they? This points to a real structural advantage.
Absolutely. Being the biggest integrated and lowest cost, that's a massive competitive moat, as you say. It means resilience.
Resilience against price swings.
Yeah, exactly. And it lets them compete on cost basically anywhere.
But it's not just cost. Look at the sustainability angle.
Yes, the S&P Global CSA ranking.
Ranked #1 in metals and mining, again, second year running.
Yeah.
And they're pushing this EcoZen brand.
Which is their low-carbon zinc, right?
Right. Asia's first, they say. And they claim a 75% lower carbon footprint than the global average for that product.
That's becoming a real selling point, isn't it, in this market?
Definitely. It's a strategic asset now, potentially commands a premium. ESG isn't just fluff anymore. Okay, so that's global. Bring it back home to India. Their domestic footprint seems just as strong.
Oh, absolutely dominant. They're India's only integrated producer of zinc and lead. The only primary zinc alloy producer, too.
And the only integrated listed silver company.
Correct. Which translates into, what, about 77% domestic primary zinc market share? It's huge.
And that consistent 50% EBITDA margin, plus the AAA rating from CRISIL. What does that combo really tell us?
Well, the AAA rating, that's CRISIL's highest stamp of approval, basically says they're extremely likely to meet their financial obligations. Rock solid.
Okay.
And pair that with a 50% EBITDA margin consistently. That's your core operating profit margin. It screams operational efficiency and, frankly, pricing power in their home market. Very strong fundamentals.
So the obvious question then, how did this strong position, this efficiency, translate into the actual Q1 numbers for fiscal 26?
Right, let's get into the figures. Revenue from operations landed at 7,771 crore. EBITDA was 3,860 crore.
Yeah.
And yeah, they maintained that roughly 50% margin we just talked about.
Yeah.
Which is, industry leading.
And profit.
Profit after tax,
Yeah.
2,234 crore, which works out to earnings per share, EPS, of 5.29.
Okay, so looking year on year, those numbers are down slightly. Revenue, EBITDA, profit.
They are, yeah, down a bit. The main reasons they cite are lower volumes and also lower zinc and lead prices on the global markets.
Ah, commodity prices. Always a factor.
Always. But what's interesting is how they counteracted that. It was partly offset, they say, by higher silver prices. Silver did well.
Right.
Plus a stronger U.S. dollar and better prices for their byproducts.
So diversification within their own metals mix helped cushion the blow.
Precisely. It shows some agility.
And what about their balance sheet? Cash, debt?
Looked pretty healthy. They had gross investments and cash equivalents of about 9,340 crores at the end of June.
Okay. And borrowings.
Total borrowings were 30,524 crores.
And despite the slight dip in profits, they still paid a dividend.
They did. The board declared an interim dividend of €10 per share. That's a total payout of about 4,225 crore.
Wow. Paying out that much even with market headwinds. That sends a signal, doesn't it?
It absolutely does. It signals confidence. Maintaining that 50% margin, generating enough cash to reward shareholders like that. It suggests the underlying business is fundamentally very sound. Management feels good about the outlook.
Okay, let's pivot to operations then, because this is where it gets really interesting, I think. They hit their highest ever first quarter for mined metal.
That's right. 265 kilotons. Up 1% year on year.
Even though refined metal was down a bit.
Yeah, refined was 250 kilotons, down year on year and quarter on quarter. But they flagged that it was planned maintenance, plant availability stuff.
Okay, so not necessarily a demand issue there.
Doesn't seem like it. And on the plus side, zinc alloy production hit a record at their HIAPL plant.
Right, pushing up their overall value-added production percentage.
Exactly, up to about 24%. And silver was solid at 149 metric tons.
But the number that really jumped out at me was the cost of production. Lowest ever for Q1.
Yeah, that COP figure. Cash cost of production for zinc, $1,010 per metric ton. That's down 9% year on year.
9%. How did they manage that?
It was a combination of things. Better ore grades coming from the mines, for one.
Okay.
Better availability of domestic coal helped.
Mm.
Using more renewable energy, which we'll get to. Getting better prices for byproducts again. And just generally, input costs softened a bit.
So a mix of internal efficiency and some external help on costs.
Exactly. But it points to that relentless focus on operational excellence they talk about.
And you mentioned renewables. The wind power numbers looked huge.
They did. Up 24% just in the previous quarter, and up 113% compared to the same quarter last year.
Wow.
Yeah, generated 134 million units. That's a serious contribution. Helps their costs, obviously, but also their whole sustainability push.
Okay, so strong operations, cost control. Now let's zoom out again.
Yeah.
The market environment. They seem really well placed for India's growth, right?
Definitely. They talk about harnessing India's growth momentum. And the key driver there is domestic steel production.
Because zinc is used for galvanizing steel.
Right. And Indian steel production is growing consistently, projected to hit 300 million tons per annum by 2030. That's a massive underlying demand pull for zinc.
And the broader Indian economy looks strong.
Yeah, the indicators are positive. Manufacturing PMI stays strong, reflecting expansion. Consumer sentiment's upbeat. It's a good domestic backdrop for them.
Okay. And what about global commodity prices for their main products, zinc and lead?
Well, for the quarter, zinc on the LME averaged about $2,641 per ton. Lead was around $1,947.
And the outlook there.
It's interesting. Forecasts suggest maybe a bit of a surplus in the market, but prices are expected to stay pretty resilient. Demand is holding up.
Okay.
But the real kicker, maybe, is silver. Prices were up 17% year on year in the quarter.
17%. Why the jump?
Driven by strong industrial demand, mainly. And there's actually a deficit in the silver market.
A deficit?
Yeah. And the forecasts suggest that deficit will continue. Think about all the growing uses. Solar panels, EVs, electronics, 5G. They all need silver.
So that's a really strong tailwind for Hindustan Zinc, given their silver production?
Absolutely. A very positive dynamic for that side of their business.
Okay, let's shift gears to their growth projects, because they're not just sitting still, are they? This phase 1 expansion sounds huge.
It's very ambitious. The board approved doubling their integrated metal capacity, adding another 250 kilotons per annum.
Doubling it.
Yeah, it's a big project. Total cost around 12,000 crores. Timeline is about 36 months once they start.
And there are other projects moving forward, too?
The new roaster at Debari, that's commissioning soon, mid-second quarter. The fertilizer plant at Chanderia, that's targeting Q1 next fiscal year.
Fertilizer, that's diversification.
It is, using byproducts, presumably. Then there's some debottlenecking and new high acid leaching plant for better lead and silver recovery. Lots going on.
What's the thinking behind such a massive capacity expansion right now?
Well, it clearly ties into leveraging their low-cost position and capturing that booming Indian demand we talked about. If steel's going to 300 million tons, they want to be ready to supply the zinc.
Makes sense. But beyond the traditional metals, there was that huge news about critical minerals, right?
Yes, this is potentially transformative. They want auctions for 3 critical mineral blocks.
Yeah.
We're talking tungsten, potash, and rare earth elements, REAs.
Wow. Where are these blocks?
Tungsten in Andhra Pradesh, potash in Rajasthan, and rare earths in Uttar Pradesh.
These aren't their usual stomping grounds. What does this move signal?
It signals a major strategic pivot, I think. It aligns perfectly with India's push for self-reliance in critical minerals, stuff needed for high-tech, defense, green energy.
Reducing import dependence.
Exactly. And positioning Hindustan Zinc not just as a zinc-lead silver company, but potentially a key player in India's future resource needs. It's very forward-looking.
It connects to their long-term vision too, right? They want to scale silver up significantly, keep costs down.
Yeah, they put targets out there. Scaling silver to 1,500 tons per annum, keeping that zinc cup below $1,000 a ton, and getting 70% of their energy from renewables.
So the critical minerals move fits into that broader picture of becoming a diversified, future-ready resource company.
Precisely. It's not just about more zinc. It's about broadening the base strategically.
Okay, let's talk sustainability more broadly. They have some pretty ambitious 2030 goals.
They do. Big targets for cutting Scope 1 and 2 emissions by 50%, net zero by 2050 or even earlier, near zero waste to landfill.
Water reduction, too, and gender diversity targets.
Right. 50% cut in freshwater use, 30% gender diversity. These are serious commitments for a company in this sector.
Are they making progress? Or are these just targets on paper?
No, they seem to be making real strides. That 3.32 times water positivity figure is quite something. It means they're replenishing more water than they consume.
That's impressive.
And getting recognized by Time and Statista as a global sustainability leader adds external validation.
And we're seeing concrete actions, too, like that underground health center.
Yeah, first of its kind at Rajpura Dariba mine. Plus, investing in biodiversity, like the Crocodile Reserve in Rajasthan.
Okay.
And that MOU with EcoPro Earth for waste to value. Looking at circular economy solutions, even launching a digital platform, the Zinc Freight Bazaar, to make logistics more efficient.
So environmental stuff, operational efficiency.
Yeah.
What about the S in ESG? The social side, communities?
That's a huge focus, too. They report benefiting around 2.3 million people across thousands of villages last fiscal year through various initiatives.
And the Nan Gars project.
Yes, the Nan Gars. They completed nearly 2,000 more, bringing the Vedanta Group total to 8,000. These are essentially modern community centers, childcare, health, nutrition, a really tangible impact in rural areas.
So significant community investment.
Definitely. And they're winning awards for safety and HR, too. British Safety Council, People First HR Awards. It shows commitment internally as well. It's all part of building that broader license to operate.
Right. Now, we have to touch on the audit. The financials were reviewed, board approved, auditors signed off. S.R. Batlaboy issued an unmodified opinion. What does that mean for listeners?
Unmodified opinion is basically a clean bill of health from the auditors. It means they believe the financial statements are fair, free from material misstatement, follow the accounting rules,
Yes.
standard positive outcome.
Okay. But there was a specific note mentioned relating to allegations from a short seller.
Ah, yes. That's important to address. The company included a note about that. Management's position is clear. They believe the allegations are baseless.
Right.
They say the transactions questioned had proper commercial substance, followed contracts, laws, regulations, all above board in their view.
And critically.
Critically, they concluded no adjustments were needed to the financial results because of these allegations. And importantly, the auditors themselves stated their opinion was not modified because of this matter.
So the auditors didn't see anything in those allegations that warranted qualifying their clean opinion.
That's the takeaway, yes.
Okay. And wrapping it up, the management commentary from the CEO and CFO seemed pretty consistent with everything we've discussed. Focus on efficiency, cost leadership, strong margins, healthy balance sheet.
Absolutely. CEO Aruna Misra emphasizing operational efficiency, CFO Sandeep Modi highlighting that consistent 50% EBITDA margin and the strong financial position. It all ties together.
So if we pull it all together, this deep dive into Hindustan Zinc's Q1, we see a company that's performing efficiently right now, managing costs well.
Definitely. Strong operational performance.
But also laying out a very clear, very ambitious path for growth, both in their core metals and now expanding into these critical minerals.
Right. And underpinning it all is this deep commitment to sustainability targets and community engagement. It's quite a comprehensive picture.
So connecting it to the bigger picture, Hindustan Zinc isn't just digging stuff out of the ground. They're really positioning themselves as central to India's industrial future, right? Energy transition, resource security.
I think that's exactly right. They're aiming to be a pivotal player. And that mix of financial discipline today, with these really forward-looking bets on expansion and diversification, it's certainly compelling.
Which leaves us with a final thought for you, our listener. Given this aggressive push by Hindustan Zinc into tungsten, potash, rare earths, how might that diversification fundamentally reshape not just the company, but India's whole industrial landscape, maybe even global supply chains in the coming decades? Something to ponder.